Let's move on. Let's focus on the jobs and the hiring trends here in India. The Chief Economic Advisor, V. Anantha Nageshwaran, last week stressed on the need for correction in wage structure by the corporate sector. Let's hear it out.
The staff cost of private listed companies, whether it is information technology firms or general, has been coming down. In other words, compensation growth has become weaker and weaker, compensation to employees. And if you take out managerial compensation, this will look even more acute, the decline. And of course, corporates have used the profits to reduce their leverage, which is a good thing. They are deleveraged, their balance sheets are healthy.
Oh, okay, all right. Let's discuss more on the corporate India hiring trends. We're also joined by the management of TeamLease. We have with us today in the studio, we have Ms. Ramani, the Chief Financial Officer at TeamLease. Hi, thanks a lot for joining in. Well, before we get to that commentary that we just got in, you're going to be having a board meeting, right, later this month, and you're looking at a couple of M&A opportunities. Could you tell us, give us a sneak peek, which sector could it potentially be in? You're sitting on a good amount of cash, the sector of preference, and how large could it be?
Yes. No, we have been actively evaluating M&A options, especially in the HR tech space, because there are quite a few startups and many products which are very interesting in terms of bringing in more productivity for employees, for corporates, and also tracking features like their attendance, leave, exit management, expense reimbursement. So we believe, since we already cater to 3,000 plus corporates in our staffing business, so these kind of options can bring in good value for cross-selling options, especially in terms of driving more HR products. So these are the areas that we are actively looking for M&As.
Size?
The ones which are currently in pipeline are smaller ticket size, about sub 50 crore. So overall,
there's a listed company. Ramani, hi, good to see you in the studios. Good morning. Zaggle Prepaid, I mean, does, on the employee side, HR side, sort of account expense management and things like that. In the same, I mean, I'm not sure you're familiar with the company, but something on those lines, essentially?
Something on those lines, but this is focused more on payroll-related management, expense-related management, employee productivity, other HR solutions. So this is in line with the one that you have mentioned.
Okay.
And you're saying the size will be small, maybe around 50 crores.
Yes.
This is all going to be funded via internal accruals?
Yes, yes. So the plan is to fund it through internal cash accruals, and in terms of contribution, the top line contribution would be very minimal because TeamLease is already over 10,000 crore in revenue. On bottom line this year, if I go with the current run rate, it would be about 5% contribution on profit. But the future projections are very promising.
And the cash, because this is going to happen through internal accruals, if you could just update us on the cash on the books.
Yeah, so we currently have about 350 crore of free cash on the books, and given the fact that this ticket size is quite small, we should be able to fund it internally.
Okay, so that's on the acquisition, small one, niche, but with good sort of scale-up opportunities, you're saying. I just want to sort of also take this opportunity to pull you in on the wider debate that's raging. The reason we played that CEA bite was that, this is not just in government sort of sectors, but we hear this debate around us as well when we're talking about the urban consumption slowdown, right? Whether this is partly because wages simply haven't kept pace with the rise in corporate profitability. You tell us, I mean, and you deal with companies across sort of, the different ends of the spectrum. Do you think there's some merit in this argument that corporate India isn't paying as well as it's sort of profiting?
No, I kind of disagree with that statement, simply going with the numbers that we deal with, because for us, the salary inflation for the 3 lakh employees that we have on our rolls has been consistently between 6 to 8% year on year. Only for IT, over the last 1.5 years, it has been slowed down. It's like 2 to 3%. And that's more like a correction which has happened, like the hikes that were given during the 2 years of COVID time. It's more like last 2 years is a correction on that number. Otherwise, we are not seeing any kind of major drop or inconsistency in the salary inflation levels year on year.
So just checking, 2 to 3% growth in IT salaries. This is over the last year,
yes,
FY23, 23-24, as a correction to the sort of COVID era big hikes that were given out.
That's
got it.
Although I think the specific nuanced point, Ramani, though, was, and I think the fact that salaries is a percentage of total expenses for companies. That I think you would agree over if you track. I mean, I looked at this data 5-6 years back. I mean, there's hardly any increase.
Yeah.
That is the point. Relative. I mean, that 6 to 8% is correct, what you said. but relative to corporate profits, I think that has essentially been. And I just wanted to, so the question there on the back of that data is, do we need help from the fiscal side in terms of spending, in terms of monetary policy? I mean, just your broad thoughts on that.
No, as of now, we are not seeing any kind of major policy intervention that is needed because, as I mentioned, so there has been a consistent salary inflation of 6 to 8% over the last few years. And even if I take last 4-5 quarters of our own hiring trends, barring IT, we have been seeing good momentum in terms of new job generation. When I'm talking about new job generation, obviously, this is about formal employment because many of these jobs are shifting from informal sectors to formal sectors, which is good because the contributions to PF, their access to insurance and other social security benefits will be improving. So we have been consistently adding about 20% net new employees year on year. And this is across sectors, be it BFSI, FMCG, FMCD, pharma, and now manufacturing is the fastest growing sector for us. So we are very positive on the outlook.
So just to go back and complete that point, you said that X of IT, the rest of the universe, the salary inflation average is 6 to 8%, right? Now, historically, how does it compare with the trends? I mean, is this always been the norm? I mean, 6 to 8%, and this is across sectors, right?
Yeah.
Is it on the lower side or is it par for the course? I mean, this is how much India pays. How should we look at it?
Pre-COVID, this number is also about the same, 6 to 7%. Now that range has slightly increased.
To
so
6 to
7 has now increased to 6 to 8%.
Okay. Okay. All right.
Inflation, though, at what, 6%?
Yes.
Therefore, the clamor around whether with and inflation doesn't take into account a lot of the other costs, right? The lifestyle expenses that have gone up, and therefore the clamor around
and also the
slowdown.
education, healthcare, those expenses are not factored into inflation. In fact, we have seen the maximum increase in these lifestyle expenses also.
Very, very quickly, Q1 you grew by 18%, Q2 around 23%. Q3, how has it been? We don't want a quantitative number, but if you could give us a broad, has it been as good as what we have seen? 20% plus is what will grow in Q3 as well?
That's what we are targeting on top line, 20 to 25% growth. And in fact, H2, we are expecting almost 50% growth in terms of EBITDA over H1. So this is mainly driven by operating leverage in our staffing business. Yes. Our apprenticeship business is also growing very strong, especially towards manufacturing segment, followed by our EdTech contribution in H2. So all put together, a very strong EBITDA expansion in second half of the year.
All right, Ramani, it's a pleasure having you with us here in the studios. Thank you very much. A little micro, more macro today. But we look forward to speaking with you once you report the third quarter numbers sometime in January. Thank you.
Thank you.
Okay, well, we'll take a quick commercial break here. We'll come back and, focus on, of course, the market, which is, it's like a traffic light, green, red, but red for now. 24,640 is where we're at. Stay tuned.